Live stream. I'm stock market coach and option trader Jason Brown. And in this video, whether you're watching live or the replay, we're going to be breaking down Cathie Woods, her Ark ETF investment, and really answering the question, should you be following Cathie Woods, her stock picks, her trades, her investments, or should you be following any guru, so to speak? Now, let's get into it. Let's unpack it and let's just break it down a little bit. So I was just over here watching a video from Cathie Woods. I'll show you what video I was watching from her. And I didn't, full disclaimer, I didn't finish the video, but let me show you what I was just checking out over here. So we pulled this up. I was just watching this video right here from Cathie Woods, and it wasn't that long ago, January 2nd. She was talking about the tech bubble and the tech sell-off, and she was just kind of laying out some of her investments and why she think that they're still going to be good trades or good investments. Now, what was interesting about Cathie's take and point of view is that we had a drastically different point of view than she had on certain stocks like Zoom, for example, on certain stocks like Teledoc, for example. So inside the university, we were talking about shorting or the ability to trade put options on a lot of these stocks. And there's a reason why. We didn't just pull it out of our head and say like, oh, I think you should just short Zoom. I think you should just short these stocks. So let me give you a little bit of my thesis. And then I want to get back to Cathie Woods, her ARK, her ETF, her investment, and talk about whether you should follow her or not and the dangers of just following people without actually having the information and understanding how the stock market works to, more importantly, make an educated decision for yourself. That's really what this is about. So it's not a bash on Cathie or anything like that. I think much like her and the rest of us, we're all investors, we're all traders, we're all trying to do the best that we can with the information that we have to make some money in the market that we're given, as well as help our followers, or for her customers, for people who invest in her ARK ETF. And that doesn't, no matter how good our intentions are, that doesn't always translate to every trade, every investment is going to be a winner. So let me break this one down. Let's take a look at one of the trades that Cathie really likes. And one of the trades that she likes was Zoom. All right. So we looked at Zoom. Let me pull up my drawing tool here. So we looked at Zoom as a team, and we walked through why we thought Zoom was not necessarily a great investment. So if you zoom out and look at Zoom, and we went through this with our members, we said this was Zoom's growth rate before the pandemic, right? And so when the pandemic hit, Zoom spiked from, a $50 stock all the way up here to a $600 stock. Now that makes sense that they spiked all the way up to become a $600 stock, because when everybody was locked in and at home, you could see the writing on the wall. Everyone and their grandmother had a Zoom account, right? Everybody had a Zoom account. Schools had a Zoom account, your work had a Zoom account, and then friends were just using Zoom just to talk to each other. Families were doing family reunions over Zoom. Like, everybody all of a sudden became tech savvy overnight. Now, what is the problem with that? Here's my problem with that. My problem with that is that simply means everybody that Zoom was going to acquire in 2022, 2023, 2024, 2025, probably 2026 on out for probably 10 years, all the people that they would have acquired and had a normal or at least a pretty decent growth rate as people caught on to technology and wanted to use the software, all of those people or all of those, let me get this out of the way here, all of those people that they would have acquired as customers, all of those people got pulled forward over the next 10 years. They got pulled forward all into 1 year. Like, everybody who they were going to get pulled forward and had an account. So what happens? You get explosive growth. But then as you put on your trader hat and you start to think, you say, okay, if they pulled ahead all their customers for the next 2, 3, 4, 5, possible 10 years, based off everyone who would have signed up has just signed up in 1 year, Well, as the world opens back up and as things get back to normal, there's not many customers who don't have a Zoom that need one now. And then in fact, as the world opens up and things get back to normal, you start to have people canceling their accounts. So what does that equate to? That equates to Zoom starting to lose customers. They start to miss out on revenue. That equates to people realizing that the growth story is no more because they already pulled ahead all of that growth in 2020 to 2021. And now as we look out to 2022, people are starting to realize, like, where's the growth going to come from? There's not much growth left to be had. In fact, there's only companies left to cancel. So why am I breaking down this ideology on Zoom here? Because I was listening to Cathie and she was talking about Zoom and saying, like, she thinks that these companies are going to continue to grow. They're going to continue to move higher. Another company that we talked about was Teledoc. To our members, we talked about Teledoc and said, like, Teledoc's the kind of the same way. Offices, doctors, different things like that. Yes, telemedicine and teledoctory is a great convenience, whether you live in a climate that's cold, or it's a great convenience if you are stuck inside during the pandemic. But we also have to look at the reality of things. If you are a doctor or a dentist or whatever type of industry that you're in from a medical practice standpoint, you have an office, you have overhead, you have equipment, secretary, staff, you have equipment and things that you can't just shift to being online. And so more than likely, this Teledoc thing would be a phase. I think it's a phase that's here to stay, but I don't think it's a growth story that's here to stay because you want people coming back into your office. You want to use that equipment that you're paying for, those machines, do the x-rays, check their blood pressure, all the things, or you do the Teledoc appointment only to find out they still got to come in anyway. So as a doctor, you might be thinking, like, why am I doing double work? Yes, this is convenient to see some patients during the lockdown, but why am I doing different work? And so you also start to see what? Teledoc. One more. We'll do one more. We'll talk about, and trust me, this is all going to tie into my thoughts on Cathie Woods. DocuSign. DocuSign is another one where everybody went online and started to sign up for the electronic signatures. This was another company that this was their regular growth. Boom, exploded during the pandemic. But now that everybody has a DocuSign account that needs one, real estate, lawyers, you name it, technically there's no real place for the growth to come from. And so that's why you're starting to see, boom, they miss earnings, boom, and they continue to sell off because the growth story isn't there anymore. Everyone who wants a DocuSign account has one, and everyone who had one that doesn't want one is now starting to cancel their DocuSign account. Doesn't mean they don't have real revenues and real customers. It's just not a growth story anymore. And so now that all that growth is being discounted back down to, I guess you would call it reality. Now, what does this have to do with Cathie Woods? Well, I already told you that I was watching this video and she was saying how she believes some of these stocks will come back. So what I did was I went to Cathie Woods. She's, if you don't know who she is, she's the CEO and founder of Ark Investments. And again, much respect to her or anyone who can create a fund, raise money, try to put together a fund and try to get a return for their investors. I do not think she's a bad guy or a bad girl. I just think she's someone who exploded on the scene and everybody touted and put her up on a pedestal as the GOAT of investing. I don't even know where that came from. She just kind of came out of nowhere and was like, Cathie Woods, Cathie Woods, Cathie Woods. But what I want people to understand or take from this is that when you just follow the GOAT blindly, when you follow any quote unquote guru, even myself, I don't want you following me blindly. I don't want people following the Cathie Woods of the world blindly because clearly they can lose money too. One more thing, before we go into her ETF and what's in there, let me go back and pull up the ARK fund, all right? So there's a lot of people when I do a YouTube video like, I'm all in with Cathie Woods, I'm all in on ARK investment, etc. So if you've been all in on ARK's ETF, you can see that the stock or the ETF was trading at 160, and the ETF is down here to almost about $60. All right. So the stock is almost at $100 discount. So if you've just been following her and just like, I'm all in, well, your account's all down. Again, no disrespect to Cathie Woods. Now let's dive into the Ark ETF. And most people don't know this. An ETF is just an exchange traded fund. It's a fund that people put together of what they believe is the best investments. And so here's what Cathie and her team believe is the best investment. And again, you can go to ark-funds.com, check out Ark Invest, and you can come and you can see they got the net asset value. That's the current price of the stock, right? And then if you scroll all the way down here, here's what I really want to bring you to down here. Just keep following me. I really want to bring you down here to right here. This is the top 10 holdings of the Ark ETF investment fund. All right. So one of the top holdings is Tesla. Now, we all know that, Tesla technically has done pretty decent. So yay, Cathie, for the Tesla pick. But this is why it's important to understand how to read stock charts and pay attention to how the market works. Because take a look at this. If you're all in on Tesla, you can tell that if you learn how to read stock charts, which is what we teach our students and try to teach anybody that we come in contact with, whether you're a student or you're on our YouTube channel, is that you can clearly see this level of resistance. Ran up, sold off, ran up again, sold off, ran up again, sold off, ran up again, sold off. And so anybody that's not paying attention, you're just like, I'm all in with Cathie, I'm all in with Tesla. But if you're trading this stuff, clearly you should be taking profits right up here near resistance. But if you're not paying attention to the charts, then you're just blindly following people and don't know when you should be getting in and when you should be getting out. Now, let's continue looking at the whole Ark ETF, and then let's take a look at some of the other ones. So look at Zoom. Zoom was the next top holding. We just gave you our theory on Zoom is that they had all this growth during the pandemic. Everybody got a Zoom account, and then they're selling off, right? So if this has nothing to do with Cathie Woods. This has everything to do with if you as a trader don't understand how to read charts, if you as a trader don't understand the best time to buy and sell, then you're doing yourself a great injustice trying to piggyback off someone else who you want to be your hero and do all the work for you. And even your heroes can let you down sometimes. Even Superman has kryptonite. And Cathie Woods, as good intentions as she is, I don't know how she can stay in Zoom, or I don't know how you as a trader can continue to follow this and just stay in Zoom. Now, Cathie can say, I'm not a trader, Jason Brown. I'm here for the long term. I think this turns around and goes up. Cool. We won't know if she's right till 10 years from now, 15 years from now, whatever the case may be. And that's kind of part of long-term investing, right? You can say something today and say, well, let's wait and see. This is a 10-year play. And you either A, hope everybody forgot about it in 10 years, or you B, hope something changes in 10 years and you're right about that stock, or you've had enough wins to offset the one call that you hope nobody remembers that didn't work out, right? But as of right now, just looking at the chart, this is in a downtrend. So how can you continue to hold this? At least until it builds a base and starts to turn around, I think you can park your money somewhere else. Now let's take a look at Teledoc. We already went through that one. That's, again, one of the top holdings. So that's what I was saying. What does this have to do with Cathie Woods? Well, this is some of her top holdings, some of the things that I believe have no reason for continuing to go up because they pulled ahead all their customer base. Look at Roku, another one of the top holdings. If you go here, you can see our good friends Roku in a major downtrend as well, which makes sense. They don't have any content. They just have the equipment. Yes, people like Netflix and others pay to be on their platform, but that's not a growth story. But more importantly, if you're reading charts, what do you see? You see a double top right here. You see that? It ran up, boop, sold off, ran up, boop, double top. So we call that the M reversal pattern, right? You had two levels of resistance that the stock couldn't break through, and the stock totally sold off. Now, I see that even as being a trader. So even if I'm with Cathie Woods, I'm like, I'm with Cathie, but if it break this support level right here, I'm getting out. And so it broke this support level. So if you're just blindly following her or blindly following anybody and you're not reading the charts and you're not coming up with your own thesis, it's a good chance you're losing money, and you're losing money for no good reason other than you're not willing to do your own homework, right? We can look at Coinbase as well, and boom. Coinbase, another one that is just tanking. Coinbase is kind of like Robinhood right now. I shouldn't say kind of like Robinhood because crypto is, I guess, the future. At least that's the way it's been touted right now. So I can see where you might get excited about Coinbase, but literally since its IPO inception, it has done nothing but go down. It tried to go back up and challenge that IPO pricing, and then it failed again and then sold off, which once again, you can basically see that double tap of resistance of where it rolled up. So kind of sold off from there, ran back up, and then started to sell off, right? So what does this have to do with you as a trader? And by the way, I'd love to hear your comments on some of this stuff. But what I think is happening right now is the market is flushing out the retail traders. I think the people who are coming to this market, because everybody's a stock trader now, everybody's a coach now. There's more ads and more noise than ever in this marketplace, which is I don't know how to say this. Sometimes I kind of like when the market sells off like it does, because you really are, they say you can see who's swimming naked when the tide runs out, right? You really can see who's swimming naked and who understands how to make money both up and down markets, who knows how to protect their accounts, who knows how to use put options, shorting, spreads, all of those option terms that we teach and use. All the people who are just like, I'm all in on Reddit, I'm all in on Wall Street bets, I'm following Cathie Woods to the moon, right? And nothing against Cathie Woods or Wall Street bets or Reddit. But what happens is if you as a non-educated trader just come in and start following these people blindly, and you don't understand how to read charts, how to do fundamental research, how to do your own thesis to say, do I agree with Cathie? Do I agree with Wall Street bets? Do I agree with people in a random Reddit forum who've never really traded stocks in their life? Like, do I really agree with their positioning? And if you don't have the financial knowledge to walk through this stuff, all of those people majority of those people are silent right now. Let's just take a look at GameStop for a second. Let's just take a look at those guys and see how the GameStop to the moon guys are doing, right? These are all the guys who are like, to the moon, nope, to the moon, nope, to the moon, nope, to the moon. Okay, maybe we're going to the dirt, to the ground, right? So GameStop just continues to sell off. When I did a video on GameStop, everybody thought I was crazy. Everybody thought I was hating on the company. And that is to most people's detriment. Every YouTuber, every person that's sharing a perspective or knowledge is not hating on the company. It's possible we see something that you don't see. And maybe you could take off your bullish lenses or your I'm going to be a millionaire off this stock lenses and say, is there something here? Could this person have a point? And that's the mark of a civilized society or a civilized trading community, for the matter. Let's look at AMC as well. AMC, a lot of people said to the moon, right? This thing has not been going to the moon. It's been going to the dirt, right? But if you know how to read stock charts, you should have been able to see this. You can clearly see this is in a downtrend. Here, let me show you. If you can't clearly see it, let me draw it out for you. You can clearly see this is in a bona fide downtrend right there. There's nothing about a downtrend that sends stocks to the moon. Never did. Never saw a moon go to the stock going down, right? Go to the stars going down, right? so um, so anyway, let me take some of your questions, some of your comments, and see what's going on. I don't even know what this guy's talking about. He just bugs Pelosi's phones. I don't know what Nancy Pelosi does, but the the most important thing is, can you think for yourself? Do you understand what you're looking at? Do you understand how to invest, understand how to trade, right? Michael says, so am I hearing that? Here, let me add that to the broadcast and see if we can pull it up. So Michael A says, I'm hearing that it's becoming even more important to primarily consider solid companies, top 10 to 15 in each sector. Do you have a general price threshold, not holding anything less than $50? So I think right now is a good time to really, when you say top companies, it's a good time to look at companies that are only in the S&P 500, a good time to look at companies that are only in possibly the Dow Jones Industrial Average, and then chisel down from there and say, what are the best ones in this sector? If you look at companies like Apple, who are in the Dow Jones Industrial Average, I mean, you know, and S&P 500 for that matter. Look at a company like Apple, who reported earnings gapped up. You can also look at Apple and say, even though they sold off, they didn't sell off like the other stocks. You can clearly see this is still in an uptrend. Look at the uptrend on a company like Apple. That is not a fly-by-night company. In fact, you could argue that the stock is continuing the trend that it's in, which is what? Pull it back, run up, pull it back. It ran right up to resistance, pull it back, and it's now bouncing. My guess is going to run back up to resistance. But if you don't know how to read stock charts, you're missing out on that. Look at Visa, who reported earnings as well. If you look at Visa's here, I'm not as shocked that it had this bounce. It's a little wonky for their support and resistance. You kind of see support about right there. And yeah, you could move it up a little bit. And if you want to just play these three levels right here, right? But we came right back down, tap. Very bullish bounce and spring. And so to answer your question, yes, you should be considering some of the best stocks who have a legitimate business and a legit management team and who could weather any type of recession or rate hikes or inflation. Those are going to be good companies that you can pick up now that are technically on sale, that most likely in a month, 2 months, 3 months, 6 months, they'll be higher than they are right now. Manuel said, do I think the sell-off is over? We talked to our members about this. I think the sell-off is dissipating, meaning I think it's getting smaller and smaller. I think the momentum of the sell-off is starting to die down. You could even look at, I'm going to bring this in. We only got like 5 minutes for the market closes, but you can see how the averages are starting to turn green. Things are starting to get bought up going into the close of the day. Compared to, or let me pull up this chart. Let me see. Oh, I wasn't sharing my screen. Sorry about that. Now let me share my screen again. Just look at the S&P 500 here. So when I look at, is the sell-off done? Look at what was going on. And we walked, like I said, we walked our members through this, which was super key. If you look at the overall market, we were going down, 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 down. We went from going down to we gapped down, got bought up. And then we kind of did nothing, did nothing, did nothing. We stayed neutral. Now today, it's kind of like one of the first days where we didn't go down. And in fact, we opened slightly lower and just been going up all day. So that's kind of letting you know that the tide is possibly turning. The selling is starting to wane off a little bit. That Delanove, yes, you can go. I don't even know what that guy talking about, man. Do we need to, is that somebody we need to block? Maybe not. Maybe since Apple pays dividends too and is one of the biggest slices of the ETFs. Okay, I thought he was I thought somebody was in here heckling. Manuela, so that's my thoughts on is the sell-off over. JD Gleck says, do you use margin accounts for your long-term holds or cash account only? I have to have a margin account because of the way that I trade options. When you trade options, you need to have margin in case you get assigned the options and then they got to turn around and sell them. Even if they got to loan you that money for 2 seconds, you need to have a margin account just in case. Ooh, that sun is like whitewashing me out. Can you pull that board over just a little bit? There we go. Perfect. Perfect. So I hope that helps. Ben says, can I start day trading with about $50? You can start day trading with any amount of money that you want to get started with. My good man Terrence, Elite, good to see you in here, man. I got your text, by the way, that you were grabbing some property, so I'm excited for you. Terrence says, I made lots of money on CMG. Do you consider this a good company? Also, do you expect Netflix to rise back to the $500 level? You know, the thing about, well, let's talk about CMG, let's talk about Netflix, and then we'll get ready to wrap this up. If you look at Chipotle Mexican Grill, we got a very nice sell-off down to a reasonable support level. Look at this level down here where buyers started to come in, and you can kind of look at the action that's happening today, right? Look at the action that's happening today. Nice bullish action going into the close. In fact, this is what I pulled over here earlier. The entire market is kind of rallying going into the close. You can see Beyond Meat, AMD, you know, Microsoft, Apple, even Roku, which is a beaten down company, Visa. And you can see all the sectors are green. So I think the selling is slowing down. And then I think you got to start looking at good companies like this and saying, is this an attractive area where I'd be interested in putting cash to work and owning it and buying it? If you look at Netflix, not that much is I like about the chart. I don't have a good level of where I would buy it, or should I say I have a good level of where I would buy it, but it's not there yet. So down here at about 267, now keep in mind, just because I want to buy it at 267 or 273 doesn't mean it's going to get there. But that's where I would feel comfortable picking up Netflix. Or you could just see if this level right here holds. But if it breaks, we probably got a little bit of ways to fall down to there. So if I was going to pick up a new company, I really like Amazon too. Look at Amazon. If you snap some support and resistance lines here on Amazon, you can see it's just slightly below support, but it's fallen slightly below support before. So I'd like to see this turn around. And then I think this is a company that you can get behind. But as far as Chipotle Mexican Grill, love their food. It's at a low risk time to start considering it. And then Netflix, I don't necessarily like where it's at from a support and resistance standpoint. So it's okay. But I don't know that I would rush into that. So, Redman, what's going on, sir? Good to see you. My cousin here, Harold Brown, good to see you here. Jonathan says, I was told a fool and his money will soon part. Absolutely. That's all the people who don't know what they're trading. They're just doing things because of what they hear on Reddit or what they hear from Cathie Woods. So again, this was no shade against Cathie Woods. What I really want people to take away from this is that you should be thinking about how can you take the information from quote unquote gurus, Reddit, Wall Street bets, whatever, and how can you apply your own thesis, your own analysis? Can you read the chart, and then can you take your own fundamental or practical analysis, apply it to the stock, and make an educated decision on what you should do with your money versus following what some random people in the Wall Street forum bets or Reddit forum is telling you should do with your money, or even someone as respected as Cathie Woods, who's clearly losing right now. But losing is part of the game. So again, no, not knocking her. She doesn't have a crystal ball, but you do have the ability to craft your own thoughts. Just because someone's a guru, which is touted by the news and media, doesn't mean that they can't be wrong. And there's a lot of people whose bank accounts is wrong right with her. But there was a lot of people whose bank accounts were right with her when she was riding the wave up as well. So again, the key takeaway, not a bash on Cathie Woods. I'm not that type of YouTuber. It's really just a call to action to say, get educated, get the information, get in the room with the right people. But even in the room with the so-called right people, you still have to analyze it and put your spin on it and say, what do you think? Do you have enough information to make an educated decision on where you think the stock is going? And if you don't have a place for that, you don't know where you can learn that stuff, be sure to check out some of the links in the description to check out me, my courses, my coaching, my community, or my free videos here on YouTube. And I'd love to hear from you in the comments. What do you think? Should you continue to follow people like Cathie Woods or Wall Street Bets or Reddit? Or are you going to get educated and get the information, start making educated decisions for yourself? Let me know in the comments. Thanks for hanging out with me. I'm signing off saying, remember, you never go broke taking a profit.